So welcome to this month's session. Y'all are welcome to ask me questions. This is more casual than the other sessions that I do elsewhere. So I'm watching the chat and y'all can definitely ask me questions. So what I wanted to show y'all is what I've been looking at in the mornings to help me kind of get some of these opening session plays. I still, my better trades are still the ones where I kind of wait for those morning reversals. We don't get those all the time. So that's why I like having another thing that I can do earlier. I'm not as, I guess it's not as reliable as waiting for that reversal. But if I, instead of trying to get a big move out of it and kind of just take a quick scalp, I've been pretty successful with this in the morning. But in case you weren't here last time, and also because I did not have audio on the recording, I'm going to kind of just go over how I engage with the market in the first place. So, I'm always paying attention to the daily, both on the futures and the underlying ETF. And this is why my trading and what SK is teaching, because this is stuff he's been developing since I was a little baby. What he does makes a lot of sense to me because he kind of looks at this multi-time frame and then multi-asset analysis. Because I really like just starting at the daily and kind of seeing what's possible. So just kind of seeing what shapes could possibly even make sense. We're not going to have a major move all the way up to here. That doesn't make any sense. We're most likely going to be staying in 2 to 3 ATR the Keltner channels. I don't know if these are exactly 2 or 3 ATR. I think I messed with them. But it's basically I'm looking for a 2 or 3 ATR, whatever makes sense for the asset. It's not going to be doing anything weird and going anywhere crazy. So, when we start getting at these extensions, I'm not looking for the market to keep moving past that. So I check it on the ETF. So for the ES, the S&P 500 ETF is the SPY, aka the spiders. It's more fun to call it that. But I also look at it on the ES, and I also just have a couple EMAs on here just to give kind of some general context too, because that context is what's really important. So this is a 21 EMA. But the point is, it's a faster EMA that's widely used. And then this one's the 50, just to give a wider look. And then I have some other ones. I think this is the 200, should be the 200. Just because those are the ones that the other major players use. And so I don't want to make it too crazy, just to give myself a little idea of where the median is, which should be like a 21 EMA. So even though we've been bearish, we've been holding above that, which is more generally bullish, but we're not pushing out, which shows me that we're in a lot of, that we're still kind of consolidating, which when you kind of look at the news, and this is why I look at the market first and then the news. I'll explain that more in a little bit, but when I look at the market first and then go think about the news, now I can think about, well, right now we've got all this Supreme Court decision on tariffs just pending. That makes a lot of sense. That's kind of where this stuff started pending. We have the Fed, Powell and Trump are against each other and having a lot of drama. So we don't really, the Fed's not giving us a lot to work with on FOMC decisions, even though we really want these rate drops. And so there's a lot of stuff that's just pending. And so in that context, it makes a lot of sense that we're doing this. So when I talk about context, this is the kind of thing that I'm talking about. And then I'll come down to the hourlies. And I'll mark levels on the dailies too. And I have my chart set to globally share these levels. So whenever I pull up the ES quarterly charts, it has the levels that I've been working on. And then I can edit them, you delete, move, that sort of thing. But then I just start marking where these major turns and highs and lows are. Because when you think about it, if we're making a trend going higher, high, higher, low, what breaks that trend? We can kind of start watching this level that interrupted that trend there. This area right here is where the market couldn't push through and failed. So that's an important spot to mark. I also mark where trends break, so where the little breakout point was. And what you'll notice is these levels end up being re-engaged over and over and over again. The yellow boxes are how I mark gaps. And these are gaps that I'm just still seeing as important. So these are weekly gaps, and I labeled them. But if there was a like in April, we had one on there labeled tariff gap because that was when the tariffs were announced. So I'll label them what they are just so I know. And then as long as the market's still engaging with them, I have them on there. There's other ways I get levels. And so they're like, this is like the most basic way, but this is the foundation you need to then learn how to do volume profile levels and TPO chart levels and order flow levels and all of that. When you start getting these major key levels, then you know where to engage with the market, because we need to know, in order to make money in the market, we need to know where and when to engage with the market. And when we come to the market, we don't know either of those, but when we can kind of mark where, and then we can find out when by paying attention to the charts. So that's what this higher time frame markup is. And I do have a couple videos on YouTube that go into a lot more detail about how I do that, and also about the trend lines too, and how I watch trend lines to break. But the hourly is one of my favorite. The 4-hour works really well. So then we have some key areas, the levels that I have marked out in the chart. I do still use magic levels, but those are more intraday. So these are the levels that I'm showing you right now are levels that I've thought out and looked at where the market stalls and turns around and breaks out at major trend changes and structure shifts. Magic levels are intraday, and a lot of time I will pay more attention to those levels I just showed you than the magic levels. But well, let me show you on the FANG chart, because what I'll use the magic levels is for something that I haven't had time to chart, but I want to look at intraday. So I keep this on my FANG chart, and you can see like these heavier levels are where things like Broadcom and Microsoft and Nvidia, where they tend to work. So if I have the time to go analyze the market, which is what I do on ES, then I'll do that. Otherwise, I can use the magic levels. But the reason that I trust these are because these are levels that I've actually watched. And then when we have a level that's getting older, it'll kind of get looser and become a zone. So that's what I have these other boxes. These are kind of zones, and you can see where the market's kind of engaging with that. That makes it a little bit harder, but that means I need to be more picky at those spots. So like this morning, I was literally watching this hourly chart while I was trading on the 5-minute, because I was watching how the market was engaging with this zone in broader context, because that's the spot I wanted to buy. We dipped through it and the VIX wasn't turning around or anything like that, so I didn't have any confirmations. Then when we started getting above it, then we did. So I didn't have to sit through drawdown because I kind of waited for that confirmation. So it looks like, oh, I missed the low, but really that's where I would have entered in the first place. I just waited and got a good little confirmation out of it. But that was because I had a spot to watch. So I could just calmly watch the spot and then pay attention to VIX and MACD and whatever else I'm looking for to come up with how I want to look at the market. Before I took this bounce, though, I took a short, which is what I wanted to show you today, because this is something that works really, really well with Steven's system here. It's also an idea that you can use just with MACD. So basically, if I want to trade the ES, and I will go over to the Qs, the QQQs, to look at NASDAQ. And again, you'll see this live all the time. I want to make sure that we have agreement. If it's an A+ setup, I'm going to have agreement between the NASDAQ and the ES. So that's going to be the spiders and the Qs. So I kind of look to see if we have the same setup on both the spiders and the Qs. But what I'm looking at is I have just the regular trading hours on. And this was something that Steven taught me that was kind of a light bulb moment. It's like, are you sure I don't need that pre-market information? And I had to watch this for a couple weeks because I'm stubborn and really watch this, but this really does work. So if we turn the extended trading hours off and just look at the regular trading hours, I think it's kind of off on the bottom, hard to see here. Then we have the gaps, and that's okay. And then the indicators are going to be responding strongly, and that's okay. But that gives us a lot of context. So the main one that I'm looking at in the morning, or the first one that I'm looking at, is the MACD, because what I want to do, and I'm looking at the hourly and the 30-minute right now. So I have two versions of this chart. I have the higher time frames, the hourly and the 30. And then I have the 15 and the 5. So these are kind of like confirmation, but these are the ones where I'm really looking to check on this MACD setup. It's literally just a simple divergence. So here's today where we opened, and we had this up here. I was looking for a short yesterday too, because we had this MACD divergence. Price made a higher high. I'll draw this out. Higher high. And then the MACD did not. So that sets up a short. And then we had kind of the same thing happen this morning. I'm combining two different thoughts here. So y'all, I showed you that smaller one. I'm going to take the smaller one off because we're ignoring that and it's throwing me off. And I'm trying to explain both at a time. So I showed you that one from the other day, but we're just looking at this one. So this one's more of a confirmation. We have the higher high on the MACD here. We get the short, and then we have the lower low is confirmed. And then this high does not break through. So if this is getting a higher high and then a lower high, we want to see that on price. So when price did not break through, I was kind of looking at that 7,008 on the ES. When we didn't get that new high and breakthrough, that confirmed the short because we did not have the bearish or the bullish divergence. I'm going to get back to the VIX thing in a second, because I just already got myself off task. So I did a crappy job of explaining that, but I hope I picked up somewhere on there. So I told you two different ones really quick because I rushed myself. The other day we had the divergence, and then today I was looking for the divergence, but we ended up getting the confirmation on the short. The other thing I'm looking at, so that's the MACD. The other main thing I'm looking at on these is the RSI. And I just check to make sure if we're oversold or overbought or not. So when we have this confirmation that we're not getting the divergence, then we have a good oversold spot here. That was why I ended up getting in that short there. The other one that I was trying to show you, this set up really, really well. Now I'm trying to remember if it was yesterday or the day before. It had to have been this one. This was the short from the other day. This one was, I prefer this divergence. So this one was basically, we got the confirmation on the MACD. I prefer this divergence, and this is giving me a bias at the very beginning of the day. And that's what I'm trying to explain here. So this one was a little bit later. That's why I prefer this one that happened the other day over the one that happened today. So we had the higher high on the MACD, and then a lower high, and then over here on price, higher high, and then a higher high. So we have a divergence there. So when this opens, which is this candle here, I don't have a stochastic confirmation down here, but I do have this divergence, and I trust this divergence over all these other things right now. So I'm just literally watching the MACD at the open to see if we get this move. So once you have that on the 30 minutes, so I'm looking all the way out at the 30 minute, I know it's a 30-minute signal, so it's a strong signal, then I can take it on the lower time frames. So today, this one's a little bit squished. That's why I like having it separated out on those other two charts, but you can see it today. So today when we got that confirmation, it was here. I didn't even have the 5-minute backed up long enough, did I? So we got the confirmation around here, and that still ended up being a really nice setup. That one was yesterday. I'm getting confused again, aren't I? But y'all see what I'm talking about there, where I go look at it on the higher time frame and then find the entry on the lower time frame. I'm exhausted, y'all. I'm going to be honest. I've been going really hard this week, and I didn't have a weekend. Okay, let's go over to what I was looking at on the how I watch the VIX. I do have it on, well, one way I look at it is this line chart. I have this open on one window, but sometimes I just kind of lose room for it. So what I keep at the very top of my left-hand screen is this. So I have them in a row. And this way I can watch how the ES is opening, because you can see this blue line here is where, it might be kind of faint on here, but there is a difference between blue and black. So that's the overnight, and then this is the New York Open. You can set this on TradingView to trade like that. The dollar is going to be a little bit different because it has a different open and close time. And the VIX will too, but you can still kind of match it up. So I literally just watch this, and I have it color coded so I don't have to think very hard about it. I always have ES as light blue and NASDAQ magenta and VIX orange, no matter what chart it's on. So I can always just glance and see what's going on. But today we didn't have as great of a signal on VIX, but I just want to make sure that it's not doing the complete opposite at bare minimum. And then the A+ setup would be when we have VIX really moving the same way. So this morning, the short, I think somewhere around here is where I actually got in. The VIX had been trending higher the entire open. You can see this blue line over here is the open. So it had been trending up that entire time. And then that gave me confidence to get in. It did get a little bit messy when we got down there. And then, so I was watching the 6970 level. I can show you. I'll switch over. This is why I keep my charts organized this way. I've explained this before, but I keep the continuous chart clean, and then I chart my levels on the quarterly contract so I can switch them on and off really easily. It works really well for me. But anyway, I was really watching the 71 level, but I was really watching this area down here around 71. So when we dipped below it on this candle, we were still really aggressive. You could see where that crosshair is on the VIX, hopefully. That would be this candle on the VIX. That was still really aggressive. And so I did not try a knife catch there. I was fine kind of waiting, because if it bounces here or if it bounces here, if it bounces down here, I potentially have a new play. But if it bounces early and then comes back through, I would have my original entry anyway. So that's where when we headed back through, I was able to enter there because I had confirmation that the VIX was also turning around. But I'm watching the VIX. And so if you watch the VIX futures, you can get other information. I think some of that's more for swing trading and broader bias and things. But what I want to do is just watch the one that will keep up with the indexes the most, which ends up being the actual index guy here. Okay, so I have MACD over here. I'm going to put this on SPY because yesterday was hard. I didn't really see a good setup with this, but I'm going to try to explain this again. We'll look at the 30-minute. And there are indicators that'll pull up these divergences. I don't trust them. They don't find all of them, but they do help draw my attention to some of them. So this was one that we had the other day where we'd kind of had this like multi-day divergence coming, and then we put in another one. And this ended up being a really nice short off the open. So you can see why taking that regular trading hours information, there's just like some pent up aggression in the market between the regular trading hours and the futures that just seems to get resolved, that you can kind of see on the MACD, and then you can get that confirmed with some other ways too, because you don't want to be trying to short directly into a level and things like that. And so that's why you want to take this broader context, always like where the levels are, into context. The other thing, when I took that short earlier, I was really watching the 69.90 level. So I knew if we were losing that, we'd kind of gotten above that a little bit, but losing that meant that we were not claiming that level, or, you could call that a fake out or all kinds of liquidity grab. There's all kinds of ways to look at that, but basically that level was not supported by the market. That when we went up here, the auction decided that's a little pricey right now. I don't feel good about that. And so price dropped. So at the open, I just always these days am looking for a divergence. So this day we had the trend was lower and the MACD was lower. So did not have the divergence set up. It did have the confirmation set up. The market immediately dumped. Then when we put in the lower low here, that was really confirmed. And then coming into a new day here, so this will be open for that day. Still in that bearish, but it's starting to get that momentum cross. That's another thing you should look for too on the MACD, is when you actually get these crosses. So I don't know why, I don't ever see them on the line as fast as I see them on the histogram. So I always look to see if I'm getting that histogram cross. So the mill roll looks really screwed up right now, but that's kind of why that one was designed. So I can kind of look through all that stuff. But if y'all have any questions, let me know. I think I'm kind of wrapping this up. I need to make a video on this setup too. I look at it on 30-minute, I look at it on the hourly, and sometimes I look at it on the 15-minute. I've always looked for these 15-minute divergences. I was looking for this chart. But when I started seeing these 30-minute and hourly ones, especially the 30-minute ones, they have just been very, very, very nice. I mean, even zooming out, you see how clear that divergence is on even just the 15 that sets up this short here? That's why sometimes I think a lot of us have been talking about kind of, I don't know if it's New Year's resolutions or trading resolutions, but a lot of y'all have been talking about taking fewer trades per day. And this is what you're looking for. This is that A plus setup where you're looking for that short, where it gave you the hint right here. Right here, you knew that was coming. And then it confirmed and confirmed and confirmed. And then it started dying and even told you it was dying there. I didn't think today's was as clear. That's why I was trying to show y'all that one from the other day a little bit more clear. Because yeah, today's was just, I didn't see it right away because I had to kind of wait for that confirmation up here. Got the rollover. It confirmed. So yeah, I have this set for the 5-minute chart, the Mo roll, which is why it looked crazy on that other one. But this is kind of the opposite. So this MACD, I'm looking for broader trends, and I have it on this chart, but I'm more likely to be looking at it on the 30-minute. But then this one's looking at the lower time frame MACDs, so that kind of helps see that precision entry. So if we zoom in here on this turnaround, so I was buying this way up here, and it's scary when you're buying these reversals. Is it a knife catch or not? This is one of the things that helps me with. So on this one, they're all red on this doji. But then on this next candle, we get 1, 2, 3 green out of the 5. And then by the time I entered, I was even working on the 4th there. So this one's giving me the idea of when the market's turning on the lower time frames. And then here I'm looking for divergences and confirmations on the higher time frames. Thanks for joining, y'all. We'll see y'all around.